Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of financial market updates. Now, folks, all this uncertainty on trade and geopolitics is leading to a lot of dislocations across financial markets. Friday provides us with an example on the currency front. Taiwanese dollar soared quite significantly, rather the most seen since 1988. Their central bank was seen intervening eventually. Likewise was the case for Hong Kong, where the authorities stepped in to prevent the peg from being broken. Even INR, for that matter, opened strongly, followed by intervention from our central bank. Furthermore, the OPEC looks to add to its supply glut and the European inflation stays higher than expected. Even the lead indicators for the US are showing the declining signs. So, JK, what do you see with such updates and actions by the authorities?
Hi, good morning, Shikhar. Yes, I think the Friday moves was more on the Asian EMs, which caught the eye of investors. A big move in Taiwanese dollar, about 4%, and it has followed through today with another 3.5% fall in the dollar value. So that was quite surprising because even Taiwanese central bank had been a very active player to arrest any big moves in the currency. But apparently, market grapevine is that there is an understanding that Taiwanese authorities would allow the local currency to strengthen in return for a negotiation on the trade tariff. If you can recall, there is a 32% tariff that is imposed on that is proposed on Taiwanese exports to US, and they carry a 75 billion trade surplus with US. So very significant. And also the other point also is that Taiwanese also depend on US for their defense requirements. So they quite likely there's some sort of an understanding with which it has moved. But I wouldn't say that's the whole thing, because you can see that many other Asian currencies, including Indonesian rupiah, which has been the weakest of late, has also strengthened quite a bit. And in this context, it was not such a surprise that rupee also strengthened further, although it had already strengthened a lot in the previous day. So we opened the gap and then hit 6-month low at 83.78 before RBI stepped in strongly, even as other central banks also defended the dollar against their currencies. And yes, rupee has had its own reasons. We have had FII flows which are positive. There are market opinion is now divided on how the geopolitics will play out. Some people talking about a limited action, or rather the targeted action, and not much of an impact on the economy. And of course, the overall fall in the crude prices, which is hugely beneficial to India. India closer to signing probably possibly a agreement with the US on the tariffs. So all these positives are also going for the INR, leading for it to strengthen. However, it's not going to be a nil tariff. It is going to be some tariff, and along with that, if the the exchange rate is also strengthening, that is what the central bank is trying to take care. They come into the market after a very long time and pushed it up to the previous day's close, near the previous day's close. So trying to achieve some sort of a stability. But if you're looking at the overall trend in the dollar as well as in the other EMs, I think market pressure will be on the downside for the dollar, but it'll have to be either central bank or a geopolitical news for the dollar to recover to a bigger target. So I'll put it right now, the range now shifting from 85, 86 to perhaps 84, 85 for the USD INR. Of course, market was looking ahead to the non-farm payroll data on Friday. Non-farm payroll, of course, came much better than expected at 1 lakh 33,000, and that was much better than what the sorry, it was at 1,77,000. Expectation was 1,30,000, and it much better. Unemployment rate remained at 4.2%. Once again, quite a divergence from the previous data on employment that we had seen: ADP falling, challenger job cuts higher, the jobless claims rising by 21,000. all these things did not match with what we saw in the non-farm payroll data. So that's something to take note of. Perhaps it gets reflected with a delay. Um, so overall, I think the data was somewhat encouraging. So that's the reason why even your stock market rose, and the yields also, picked up. And after the data, market has once again repriced the rate cut expectations for June, which was at around 50% for a cut, and now that seems to be getting pushed back to July. So however, FOMC is up in the next 2 days. And with in general data from US coming softer, as we know, inflation has been lower. Job data is mixed, of course. GDP has been on the negative territory, though for special factors, of course. Manufacturing is certainly, on the slowing side. So I think with all that, and tariff discussions on, maybe tariffs are not going to be as high as they were initially proposed. And so the possible that at some point Powell might sound a bit more dovish than he had in the previous meeting. So that is my expectation. I think we need to wait for his statements on Wednesday. Of course, they have had a lot of inputs to consider, particularly on the inflation front. So the dollar overall has been quite rangy, but slightly on the stronger side. But it is very, very tentative. I think underlying trend still remains one of weakness for the dollar against the majors, as well as the EMs, as confirmed in the recent sessions. That continues. Crude oil once again fell. Now, I mean, one would be surprised why they are increasing the supply. OPEC is increasing the supplies when the prices are lower. But I think there has been a lot of divergence on the production targets being met by various OPEC countries, and Saudi is increasing their production because other countries are also not meeting their target, or they're producing excess. So this is actually putting US in a fix, because their cost, they have been having a bigger market share. Now with this lower price, production of shale oil will become uneconomical for them. So possibly market share coming back to OPEC is one of the targets why they have done it. Whatever it is, I think India benefits out of this. While China has been on a holiday till today, it's closed. The Chinese yuan has strengthened on the back of indications that Chinese are also now inclined to, go ahead for some talks with the US, but nothing concrete. We'll know it when they come tomorrow. But Chinese yuan has broken the 7.20 levels. There is the offshore yuan that is also putting some pressure on the Asian currencies. On the gold side, it is still correcting, but there is some re-emergence of some tensions in the Middle East, Israel and Gaza, so that actually keeping the downside limited to 3,200. It's still moving between 3,200 and 3,250, waiting for the close. Yes, in major markets today in Japan, China, and UK are closed, and so that can keep the markets somewhat quiet. But definitely, market looking ahead to what happens next with the Asian currencies. That's the biggest focus right now. Finally, I cannot miss updating that the guru of investing, Warren Buffett, retired from Berkshire Hathaway yesterday. Over nearly 6 decades, having transformed the company from a struggling textile company to a 1.16 trillion conglomerate. Definitely, his words of wisdom probably market will miss unless he chooses to continue to give his golden words. Otherwise, I think it's a end of an era which we should acknowledge. Yeah, thank you.
Okay, JK, and yes, definitely that is indeed an end of an era. And being one of the most revered personalities in this industry, we would have really been keen on further more updates from this kind of a personality. On the other hand, yes, folks, China, though on holiday today, broke below the 7.20 levels, which adds on to the Asian strength narrative. And overall, Asian currencies have been seeing some strength with the update towards Taiwanese dollar being, the authorities also talking about letting the currency to strengthen to adjust for the trade negotiations. Other than that, the Indian currency was seen having positives from the trade discussions, the flows, as well as the fall in crude prices. The kind of positive for the trade deficit. And this fall in crude prices are primarily from the oil supply glut, which is also on the backdrop of OPEC deciding to add on to their supplies further. Primarily which can put pressure on the US shale as well, and eventually putting pressure on the US economy. On the US front, if we have to further talk, the NFP release looked positive, but the other set of updates continue to provide mixed set of signs, and this might put the currency pair in slight rangy action. But the overall movement has put a lot of members into the question whether the kind of dollar dominance that used to exist is now being questioned by rest of the currencies. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for joining.